So this is the 2019 tabular statement from the Examcradft mock. It's a 60-mark question. There's no difference in the process of doing the 60-mark and 100-mark question, so that's why we'll do this one. So just with the tabular statement, the important thing really early doors is the layout. So we're going to list all of our assets and then list all of our liabilities. So top half of our page we list our assets. Bottom half of our page we list our liabilities. There will be a specific sheet given to you for tabular statements in the leave insert, so it's not one-to-one, so you have to rule out yourself. So you see here we've got our goodwill of 63,000, so I'm just going to put in on the first here. So we've goodwill of 63. Now then our assets and liability, sorry, our tangible fixed assets, we put in the cost figure and then we always put in the depreciation as a minus. So that gives you then the 655 of the difference, which you're obviously not going to put in. So so that's our start there. Sorry, it's 115. Equipment, same thing, 120, and then minus 35. And vehicles, 95,000 minus 37. And then you'll see I've got investments of 100,000. So the investments just go in. So they're all of our fixed assets in. Next thing, you've got stock of 47,000. And then we've got debtors less 5% provision. So when you see that 5% provision, you make room for bad debt provision. So you go debtors less bad debt provision there. So debtors less provision for bad debts is 32,300. So debtors on its own is going to be 32,300 divided by 95 multiplied by 100. Because this here includes a 5% provision. So in total it's 100%. If you take away the 5%, you're left with 95%. So 32,300 is 95% of debtors. So debtors is 34,000. So to get down to the 32,300, there must have been a 1,700 bad debt provision. So that gives you your 32,300. Cash is 200, and insurance prepaid is 350. We're going to leave. You should probably leave 2 lines, I suppose, for any extras that might go in. I'm just going to leave 1 because I've read through the question already. I know there's actually nothing extra to go in. So now our liabilities, then we've got 35.5 for creditors, 27.1 for a bank overdraft, 3,550 for your VAT. VAT's a liability in this case. Expenses due 950. Don't mind your authorized share capital. So issued share capital 600,000. Share premium 40,000. And the profit and loss balance is 333,750. There's no revaluation reserve, and there will be in a little while. So add them up, and if you've done it correctly, the assets will always equal the liabilities all the way forward in this. So just be aware of that. That assets always equal liabilities. So okay, so that's it. Ruled out again. I've left a little bit of a space for any extras that are going to go in. There will always be extras in the liabilities. So it's pretty much always going to be a revaluation reserve. So from there, then you don't really need the layout anymore. You just need to look at the workings page. And each of these is its own little working. Every single one of these you would have seen in a question 1 in some way. And you just treat them basically that's the way I would do it. You treat it as if it's a question 1 working, and how would you deal with each of these if it was just a little working working you had to do on your working sheet. So for the first one, it's you're revaluing land and buildings, which includes land at 250. Now just highlight that land is 250. That's going to be used in the depreciation working later in the question. Um, but for the time being, you're revaluing land and buildings from 770 up to 800. So what happens when you revalue land and buildings? Well, land and buildings go up. So 770 up to 800,000 is 30,000. You get rid of all accumulated depreciation. So minus 115 has to go to zero. So it'll be plus 115. And then the two together is a revaluation reserve. So 115 plus 30 is 1145 revaluation reserve, which we know is a finance buy. And you'll see in this, again, add up your assets, 145, add up your liabilities, 145. Okay, so that's that one done. Again, just highlight that 250 land, and we'll use that in the December working for depreciation. Merch. So he buys business. So you'll see that in service firms or incomplete records, or certainly incomplete records or any business. But we know he's bought a business which includes assets and liabilities. So the assets are land and buildings, which is 120. So they go up by 120. Debtors 16.5. Well, they'll go up by 16.5. And he's also taken on creditors of 18,000. So creditors go up by 18,000. Okay, so that's what he's done. So the business is worth 100 and whatever that is, 118,500. It's not really that important. But how did he pay for it? He paid for it granting 100,000 shares. So issued shares have to go up by 100,000 at a share premium of 25%. So 100,000, 25% of that is 25,000. So he's bought the business for 125,000 and the business is worth 118,500. So we know there's going to be a goodwill of 6,500. Now the easy way to do that, well, one of the ways to do it is to do what I just did there. So value the business 120 plus 16.5 minus 18, 118,500. Compare that to the 125, and that's a difference of 6.5, and that would be your goodwill. Or the other way would be add up your liabilities, which is 368. That can't be right. So that should be 25,000, which is 143. Add up your assets. It's 1365. So the difference between the two of those is your goodwill of 6,500. Okay, and then both sides add up to 143. Now, next one, April. Management decided to decrease the provision for bad debts to 3% of debtors. So we know in question one, anytime there's a change in bad debt provision, that affects the bad debt provision, and then the change will go into profit and loss. If it's a decrease, it's a plus. It's an income, so it'll add to our profit. If it's an increase in bad debt provision, that's an expense, so it reduces our profit. So the first job is to work out what the change in bad debt provision is. So to do that, we can just do it as a working. The new BDP is going to be 3% of debtors. Now it has to be 3% of the total debtors, which is 34,000 plus 16.5, which is 40,500. So the new bad debt provision is 1 to so it must have been 2% rather than 3%. It is 3% of debtors. So the new bad debt provision is 1215. The old bad debt provision was 1700. So the difference between the two of those is minus 3. What would that be? That should be 50,500. So that'll be 1515. So the difference between the two of those is 1700 minus 1515 is 185. So to go down by 185, you have to add it back on because bad debt provision is a minus. So 1700 minus 1700 plus 185 is 1515. So that's our decrease in bad debt provision. So that goes there, 185. And then your profit will go up by 185 as well. So remember, profit and loss balances, or sorry, it decreases in bad debt provisions, increase your profits. So you have 185 and 185 for your assets and liabilities. Okay, next one. Purchase goods sold credit for 2460. This includes VAT of 23%. Now, we've seen this in loads of questions lately where you bought goods and they tell you the VAT amount. When you buy the goods, you buy them from creditors. So you owe your creditors the full amount, 2460. So creditors go up by 2460. However, the value of your stock only goes up by the amount excluding the VAT. So your stock will go up by 2460, and to find the amount without the VAT, you divide by 123, multiply by 100. So the stock, what you've bought is an asset costing 2000. There was VAT of 460 on it. When you buy goods, you're allowed to claim that VAT back. So your liability goes down. So the VAT on purchases and the VAT on sales returns always reduces your VAT. The VAT on sales and the VAT on purchases returns increases your VAT as a liability. So this 460 reduces your VAT liability. You can also just think about, you have to make the thing balanced. So the top is 2000, the bottom is going to have to be 2000 as well. So, so the that's May 2000 done. June then. Sorry about that. June then, expenses due related to an outstanding electricity bill from Bord Gosh. After initial disagreement over the amount, it was agreed to pay 1500 in full settlement of the debt. So if you think about this, this is nearly like you buy goods and get a discount. In reality here, what's happened? Expenses due expenses due are here. They are, where are they? 950. All of that 950 is now not due anymore because you've come to an agreement with them that the 950 is gone. So you don't owe them 950 anymore. So what's happened? You've paid them 70% of the 950. So your bank overdraft is going up by 70% of 950, which is 665. So you've paid them 665 for a debt of 950, which means you've received a discount or a haircut of the difference of, what would that be? 285, I think. So that's 0 and 0 there for June. So again, what's happened? A bit like if you owe a creditor money, the expenses due are creditors. It doesn't matter what you've paid them. If that represents a full and final settlement, well, the full amount disappears. So even though you have only paid them 665, the due of 950 is gone. So you don't owe them that 950 anymore by paying them 665. So the 950 goes down to 0. So 950 minus 950, 0. You've paid them 665, and the difference between the two of them is a discount allowed. So your profit is going up by 285 euros. Okay. Now, the second part of that, it says an annual insurance premium of 1500 was paid. So again, your bank overdraft is going up by another 1500. So I'm just going to add 1500 onto that. You could do it in two separate workings if you wanted. And then my insurance prepaid will go up by 1,500. And we finish off that June working, that insurance prepaid amount when we get to December. Okay, so that's June done. September, um, it's good solid credit for 12,300. This includes VAT at 23% and a markup of cost at 25%. So we're going to have profit and loss. We've made a markup or a profit on selling the goods. Debt, we're going to have debtors because we sell goods to debtors. We're going to have VAT, and we're going to stock is going to go down. There's quite a bit in that. So if we sell goods for 12,300, debtors goes up by 12,300. Sold goods on credit. Doesn't matter that 23% of it is VAT and there's a markup. The debtors owe us the 12,300. You work backwards then from that. Okay. Well, I would work out the VAT next. So when we sell goods, VAT increases. So we need to work out what the VAT is of that 12,300, and that'll give us this cost price then on the stock. So if we take the 12,300, that's 123%. The cost price of the goods being 100%, the VAT being 23%. So the VAT is 120 is 23. So we're going to take the 12,300, divide by 123, and multiply by 23. That'll give you 2,300 as the VAT, which means the stock must have had a cost of, well, the stock had a cost of, or had a selling price of 10,000. Okay. However, of that 10,000, there's a markup of 25%. So we take the stock of 10,000 that we sold it for 10,000 in effect. We're going to divide that by 125 and multiply by 100. And that gets you back to the cost price of that stock, which is 8,000. So you got the stock that cost 8,000. You sold it for 10,000, which means you made a profit of 2,000. So that gets you up to your 10,000. 8,000 plus the profit of 2,000 is 10,000. Then there was VAT of 2,300, and the debtors then owe you 12,300. So that should now, stock will go down by 8,000. And when you sell stock, stock goes down. So that should give you 4,300 as your balancing figure there, because there's a profit of 2,000 and VAT of 2,300. Okay, now that's it's not tricky enough, but it's the process is always work backwards. So take the VAT off, then take the profit off to find your stock elements. October then. October is goods sold in September, so part of these goods here for 3,075 were returned owing to delay in returning the goods. Kim issued a credit note for 2,950, so they're not getting a full credit note for the 3,075. So same again, debtors. We'll deal with that first. Debtors goes down by 2,950 because he doesn't owe us 2,950. We've given him a credit note for 2,950, so that's what debtors goes down by. Now, once we've done that, we can go back and we're going to work completely off this 3,075. So we sold those goods for 3,075. So we're going to go through the same process of that 3,075. We take that 3,075, we're going to divide it by 123. This is on the bank, equals 3,075. We're going to divide it by 123 and multiply by 23. That will give you the VAT amount, and that's 575. Now, sales returns is like purchases, it reduces the VAT liability. So if we increase VAT with sales, we decrease VAT with sales returns. So that gives us, then I'll just do it as nearly as a working down here, 3,075 minus 575 gives you 2,500. So we sold the goods ignoring exclusive of that for 2,500. Work that backwards then because the stock doesn't include the profit. So the 2,500, we have to take off the 25% profit off that. So we're going to divide by 125, multiply by 100, and that'll give you 2,000. All right. So That gives you 950 here, or minus 950. So we've got minus 575 here. Anytime there's goods returned, it's a loss. So you're going to have a minus number here. So it's going to be a loss of 375 to make it balance. Okay, so the profit and loss is the balancing figure. And that should be all right on that. November, now you see this the whole time. A creditor who's owed 1800 accepted a motor vehicle, the book value of which is 1600 in return for a debt. So the creditors owed 1800, creditors go down by 1800. Doesn't matter what he accepts, he's no longer owed 1800. He accepts something with a value of 1600, which means we've made a profit of 200. We're not going to put that in there. You can do that after if you want. But he accepts a motor vehicle. The motor vehicle is worth 1600, but at a cost 10.5. So motor vehicles go down by 10,500. If it was worth 1600, it must have had a load of depreciation on it. So 10,500 to 1600 would be, what's that, 9 to 8,900. And that'll give you the 1600. Okay, so again, we reduce our debt by 1800 using an asset of 1600. So we were given a €200 discount. So that's why our profit is €200 there. So, and then that balances as 1600. Okay, December working then, 2 December workings. So we'll do our depreciation. So the building's depreciation charge figure is 2% of book value. The depreciation is to be calculated from the date of valuation of the date of purchase. This is where the land comes back in. So we'll go back up to our depreciation. We revalued our land 800,000 on the 1st of the 1st. So, our land and buildings, of which land is 250. So of that, if we want to depreciate that, I should do it down here. So depreciation of buildings, we're going to have 2% of 800,000 minus 250. So it's 2% of 550. Now we revalue that on the 1st of the 1st, so it's by 12 months. So it's by 12/12, so that's 11,000. Okay, the second part then, in March, we depreciated 2% of the buildings we bought in March, which is 120. If we bought them in March, we only have them for 10 months of the year if we bought them on the 1st of March. So by 10/12, which will be, it should be 2,000, let's say. Yeah, 2,000. So the total depreciation on the land and buildings is 13,000. So we just work across there. And we're happy enough there on that. On depreciation, is the equipment is to be depreciated at a rate of 15% of book value, reducing balance per annum. So that's asking you, when it's reducing balance, do you know to take away the depreciation? So in this case, it's 15% of 120 minus 35. So 120,000 minus the depreciation of 35,000 is 12,750. That's, again, remember, they're all minuses because depreciation is a minus. Motor vehicles, it tells you the depreciation is 4,500. So in total then, your total depreciation is 3,250. So your profit and loss, all depreciations or expenses, are 3,250. Okay, and that gets us to the second part of our December working, which will link in with our total. and that's to do with the June working. So the annual insurance premium 1,500 was paid up to the 31st of May. So this is like your rent receivable and all that in your service firms and incomplete records. This 1,500 goes up to the 31st of May. So 5/12 of the 1,500 is what's prepaid at the end of the year. So if we look at insurance prepaid in our total, because that's what we have at the 31st of December, 1,500 by 5/12 will give you your prepaid. So your insurance prepaid is 625 at the end of the year. So then it's how do you get to 625 from what we have? So we started off with 350. We paid our 1,500, so that's 1,850. So how do we get from 1,850 to 625? You take away 1,225 from that, and that'll give you your 625 now when you total it. So then if you've got 125 there, your profit and loss. So you're transferring of everything we've done during the year, you're transferring 1,225 as your business expense. So your profit and loss goes down, your profit goes down by 1,225. And that's it done. So then all we've left to do is just total off everything. Now this is time consuming, I suppose, but remember you start at the 1st of January, you go to the end of the year, and then just total them off. And then hopefully they all balance, and they do. Okay, and that's a sign you've done most of it right. So hopefully that's of some use to you. Just the ones to be aware of are the VAT, really, that you always take the VAT off and then take the profit, work back to the cost price. So it's work back to the VAT, then work back to the cost price when you've sold goods. That's really the only thing to be aware of in those. All right, we'll get a few more of them up and we'll talk to you next week.